Breaking into the world of venture capital isn't like applying for a traditional finance job. There's no standardized recruitment process, no clearly defined entry points, and often no job postings at all. Instead, getting a foot in the door requires a mix of skill, strategy, and, perhaps most importantly, access to the right networks. Venture capital is an industry built on relationships, market insights, and the ability to recognize transformative ideas before they become obvious to everyone else. For those looking to launch a career in VC, the challenge is twofold: understanding the roles available at the entry level and developing the skills that make a candidate stand out in an industry where competition is fierce. Unlike investment banking or consulting, where large firms hire in cohorts and training programs are standard, venture capital operates with lean teams. This means that junior roles demand versatility, requiring individuals to juggle market research, deal sourcing, founder meetings, and portfolio support all at once. At the entry level, two key roles dominate: analysts and associates. Analysts are often recent graduates or individuals with a year or two of experience in finance, consulting, or startups. Their job is to act as the firm's research engine, identifying emerging market trends, scouting promising startups, and analyzing data to support investment decisions. A typical day for an analyst might involve combing through startup databases, tracking industry shifts, attending pitch events, and conducting preliminary due diligence on potential investments. Though the analyst position is usually a temporary role lasting 2 to 3 years, it provides invaluable exposure to the inner workings of venture capital and serves as a stepping stone to more senior positions. Associates, on the other hand, take on a more significant role in the investment process. They usually have a few years of experience in fields like investment banking, private equity, or startups, and are expected to engage more directly with founders and portfolio companies. Associates not only conduct deeper due diligence, but also participate in high-stakes meetings, build investment memos, and help shape investment strategies. Their work often involves analyzing financial projections, assessing product-market fit, and understanding a startup's potential for scalability. Over time, associates gain the experience needed to transition into principal roles, where they take the lead on investments and begin to build their own portfolios. Success in venture capital isn't just about technical proficiency, it's about having the right combination of analytical skills, market intuition, and relationship-building abilities. While financial modeling and understanding cap tables are essential, the real differentiators are investment judgment and pattern recognition. Being able to spot promising founders, recognize emerging industry shifts, and differentiate between hype and genuine innovation is what sets great investors apart from the rest. Venture capital is, at its core, a people-driven business. The ability to network effectively, build trust with founders, and maintain strong relationships with co-investors can make or break a VC career. Many successful investors are those who have spent years cultivating relationships within the startup ecosystem, attending industry events, engaging with thought leaders, and staying connected with accelerator programs. Founders want investors who understand their vision and can provide more than just capital. They want strategic partners who can open doors, make valuable introductions, and offer guidance through the highs and lows of building a company. But perhaps the most underrated skill in venture capital is storytelling. A compelling investment memo or pitch to firm partners isn't just about data, it's about crafting a narrative that makes a startup's potential undeniable. Whether it's articulating why a startup is positioned for massive growth or convincing skeptical partners that a founder has what it takes to succeed, the ability to synthesize complex market dynamics into a persuasive argument is a must-have for anyone looking to thrive in this field. Career progression in venture capital isn't as linear as in other financial fields, but there is a general trajectory that most professionals follow. Analysts start by supporting the investment process through research and deal sourcing. Associates gain deeper exposure to investments, working directly with startups and leading portions of the due diligence process. Principals take ownership of deals, often leading investments and taking board seats. Partners, the decision-makers at a firm, are responsible for managing deal flow, maintaining relationships with limited partners, and steering the overall direction of the firm's investments. At the highest level, general partners control the fund, deciding where capital is deployed and ensuring long-term returns for investors. That being said, not everyone follows this path. Many venture professionals transition into other areas. Some join startups as operators, some become angel investors, and others launch their own VC funds after building a strong reputation in the industry. The ecosystem is fluid, and experience in venture capital opens doors to a variety of high-impact opportunities. So, how does an aspiring VC stand out? It starts with thinking like an investor before ever stepping into the role. The best candidates are those who proactively build investment theses, analyze markets independently, and engage with the startup ecosystem even before they're officially part of it. Writing about industry trends, sharing insights on social platforms, networking with founders and investors, and even making small angel investments or working at a startup are all ways to demonstrate initiative and strategic thinking. Ultimately, breaking into venture capital isn't just about having the right resume. It's about proving that you understand the game, that you can think critically about markets, and that you bring something unique to the table. Because in a field where competition is fierce and capital is abundant, the real value lies in the people who can see what others don't and make investments that shape the future of industries.